Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Haven't said that in a while. Let's take a look at some charts, shall we? First of all, let's give it a round of applause for all of you who have survived the bear market and have said to themselves, I'm going to keep buying here, because this was what this chart is showing from looking at Bitcoin. It is telling us that wallets with more than one BTC continue to grow at all-time highs, despite the downturn in price. Whole coiners are being birthed left and right throughout the bear market, which is an incredibly good signal for people on the DCA camp, for people who understand this is a long-term play. This isn't a get rich quick. Good for them. Good for you if you're one of them. So I love looking to bitcoin.com. They don't sponsor this or anything. They just have really good charts for free. So go check that out. Stock to flow, I'm not a fan of, but what I do like is thinking about what a run may look like going forward in Q4. You know, where's the limitations of a bull run in Q4? Is it the bottom? Have we hit the bottom, Josh? I get that question a lot. But I like this chart because of the halving date reference and counting down the days until the next halving. So we're about 610 days until the next halving. The colors, they speak to me. They tell me, look, Josh, we probably aren't going to have a run that's going to be super impactful until the next halving. And ultimately, the bottom of these cycles isn't until a year before halving. So it's awkward because as bullish and mean reverty as we're looking from a potential perspective, I just have to keep that in check. And it does align with the edge-to-edge trade stuff that I'm going to show towards the end. But I think people have to know and realize this isn't probably going to be a multi-quarter setup that we're talking about here. It could be a multi-month run. You know, I'm always thinking about duration and calendar, and obviously the ETH merge should and will play a massive role in price for good or bad as a catalyst. You know, my money's on good rather than bad. But Q4 is typically a better quarter, just like Q2, which last Q2 was a dumpster fire. There's no ignoring that. Maybe the seasonality is busted and broken. But using this as a guide to set expectations, this says, okay, we probably aren't going to get a face-ripping multi-month rally past like 6 months, right? Who knows? But as we sit here now, it's hard to see a crazy multi-month rally because we're in between those halving cycles like we are. But if we're asking ourselves, are we closer to a bottom than a top, we can use something like the 2-year MA multiplier. Green is the 2-year MA, red is 5 times the 2-year MA. And it does give you a pretty good idea historically of overbought, oversold. We've only gone up and to the right historically, so this has been excellent on backtesting, right? The question I've been trying to answer recently is, okay, on backtesting this stuff looks great, but what happens if we create this U-shaped downward slope? It kind of destroys every single backtest that relies on stuff like this, because much like how ETH was in that bear market territory for a year plus, you know, you might have a coin that's just continuously in the green zone telling you everything's fine, we're at a low, buy, right? But that may not always be the case. It has been so far. So it's important to keep that in mind. But it definitely looks like we're closer to a bottom than a top based on that. And we can add stuff, we can add evidence, right? All this is looking at the left side of the chart. It's all basically the same. It's all telling you basically the same thing to varying degrees, some nuances here and there. But yes, I know this is a meme. Every time I post this, someone says, somebody created that at 3 a.m. and as a joke, and then you're trading it as a serious thing. I get it, okay? It's still a rainbow chart. It gives you, it's like a pitchfork. It's like a regression pitchfork thing. Whatever. Point being, we're at a similar place on this than every other bottom, right? Is this the bottom? I don't know, but it looks pretty good. In 2 months, when we're at 33K plus, people will be saying, man, that rainbow chart was so correct. I should have took some action on that at least. You know, that's something to think about. And if we're talking about the true gamut of all this backtested stuff, let's talk about stuff that's clearly busted and broken, besides stock to flow, which to me is just dead in the water at this point, has been for a while. just way off the mark. This is Bitcoin log growth curves, which have not held up well at all. This is a line of best fit, a regression, whatever you want to think about it as. And I don't know how many days we need to be above or below this thing for people to take it seriously. I don't know if anybody ever took it seriously, but I'm just saying, like, look, this is clearly not what you want to see on a backtested model like this, where it's just free floating with no signal, right? Maybe this will eventually be correct. Maybe it'll snap back into these log growth curves, but it doesn't look great at this time. PyCycleTop and I have a bit of a love-hate relationship. Famously, I said in the last cross, which is a 111 MA and a 350 times 2 MA. So again, it's back tested to specifically fit this, at least leading up to last year. I think it was created. There was a lot of stuff created 2019, 2020, including Power Law Corridor, which I'll talk about in a second. But I famously said this was the only thing that was bearish at the time. And I said, there's no way this thing is correct and everything else is wrong. Okay. I was wrong. It was right. Powerful signal. Something else, though, to watch as far as bottoms are concerned. A cross over the 111 MA, which would be this orange line, as well as just distance from 350 times 2 MA, does give you a decent idea of where bottoms tend to be. You know, we tend to bottom out when the percentage here is at its maximum historically, right? Maybe we keep going to zero. I don't know. But at some point in time, the idea is this stuff snaps back to the mean a little bit. We can also look at Puel, which is a measure of really mining profit versus today versus the past year on average. Miners clearly just not very happy right now from a mining profitability perspective. Price playing a big role in that, rising hash rate and difficulty playing a big role in that. As far as bottoms are concerned, we do typically see a significant multi-week drop in difficulty, which means hash rates falling off a cliff. We haven't seen that yet. We've seen hash rate decline, but not even to the degree of the Chinese miner exodus. So maybe it's different this time, TM. But that would be one other thing to watch for should we go south. You know, it's simple, right? Any long strategy here is a trade setup. The stop loss should just be lower lows beyond whatever we have on the chart. You know, it's like the opposite of a short. If you're shorting every all-time high, your stop loss is just all-time high. You know, that's a simple way to think about it. And it's a simple way to think about it here. Whatever this lower low is, 1918, just say, well, just keep long until you're right. You know, that's one way to do it, certainly. But the Puel multiple is in historic levels of lows, as well as MVRV, which is measuring market cap versus the cost basis of aggregate, every coin on the chain, right? The aggregate of everything that's ever moved on average. So we typically hold or have held down in this area for 3 months, 6 months. It would make sense to me that a bottom is down here, but it would also make sense to me if we kind of do a bunch of nothing here for a couple months before doing anything. I think our chances, though, honestly, to do stuff is Q4 and Q2 of next year. I'm not even going to bother talking about the Fed and macro. All that's just a complete dumpster fire, whether or not anybody's going to pivot on the Fed side of things. But that's obviously a consideration as well to think about how all that aligns with this on the calendar year. All right, now that's enough of that. That's enough of that. Let's take a look at some dark mode charts, shall we? This is TradingView now. And another issue with the multi-month bull rally is we historically have never done that below the cloud. Wouldn't really make sense to do that below the cloud. If you're not familiar with the cloud or this YouTube channel, welcome. But first of all, you're bullish if you're above the cloud. You're bearish if you're below the cloud. The cloud is essentially, but not really, a measure of moving averages-ish. You know, you can read up on it and watch some of my other videos describing it. But the idea here is, at a glance, you can see, are we bullish, are we bearish? Clearly on the weekly, we are not bullish. We are very definitely not bullish. Really, the only times we have had these bull runs in bear territory has been 2018, when we sort of popped back up to the cloud. The equivalent of that would probably be around 45-ish, 38, whatever that is on the cloud here. The other type of trade is that multi-year kind of through the cloud here on the weekly after 2015. But we really haven't seen that. You know, my expectation again is 3 months of craziness, sideways for a little while, regroup, figure out what to do, and then maybe we test all-time highs like Q2 next year, right? I do not see, as I sit here now, the likelihood that we test all-time highs. But that being said, there's definitely a tradable range here with setups that look pretty good. Hence why I'm doing a video. I haven't talked to the world on this channel in a while. One other thing to mention about bottoms, this is the power law corridor with the 200-week moving average. The reason people look at the 200-week is because historically that has been the bottom. Every time we've had a bottom, we've touched the 200-week. We've bounced from that level. And the power law corridor is a line of best fit through the 3 previous all-time highs. So it was created here. It gets adjusted depending on who makes it or uses it. Maybe they'll add rows to this, whatever. Point is, it's a guideline projection, much like any rainbow chart, right? You'll see 10,000 versions of this. Shouldn't be taken as gospel. It is just an idea. But again, it tells you historically, where are we today versus where we were? Overbought, oversold. Again, we're closer to the bottom than the top on this. I don't think that's up for debate. You know, you could say, well, I think we're going to 12K or 13. I'd say, okay, we're even more closer to the bottom there, down there, right? But this definitely looks like we're closer to a bottom than a top at this point in time. So here's the meat and potatoes. I buried the lead for 10 minutes, whatever it was. This is really why I thought, you know what, now's a good time to record a video, because we have this once a quarter trade setup. Those of you who know what I'm about to say, but this is called an edge-to-edge trade. This is the cloud again. We're bearish if we're below, bullish if we're above. And then there's this interphase, this other trade, this trend reversal trade that has very specific criteria that you can see coming month or two in advance, right? This option started to come to fruition in July when we finally bottomed out for a decent period of time. So what you're looking for is first a bullish TK cross, blue over red. We don't have that yet. Second is a candle close inside of the cloud. We do not have that yet. And third is the most successful trades like this have a long flat Kumo. And the most recent example of this actually not working out is this March-April setup where you did have your bullish TK cross after this BART, whatever you want to call it, fake out, breakout. You got the bullish TK cross. Then you get some variation of candle inside the cloud. And all while this is happening, you know your target just like you do now, right? It happens to be 33. I don't make up the numbers, okay? It just is what it is. It doesn't matter if it's 10, 20, 30. I'll look at some alts at the very end, and you'll see this type of setup everywhere. Whether or not it actually makes it to all those charts, I don't know. But the setup is there, right? So this is the setup, and that's what you're looking for. And one thing you can use as a trailing stop loss when this trade is active is fractals. So they're called Williams fractals on TradingView, or fractals. You may see that on other trading platforms, but they print hats or chirons, whatever you want to think of this as, when you get a high in between two lows or a low in between two other candles. So high, low, low. And this is essentially telling you if you get higher highs, you're good. If you get lower lows, that's a stop loss, right? So in March, let's say this is the trade. Right? Let's pretend fast forward a month and a half from now, and we might see price action like this for BTC. What you should be using is something like fractals, non-investment advice, and this can help you as a trailing stop loss, right? So you don't get a fractal print this entire time, right? And if the most recent fractal print here would be 40K. So over time, you'll see fractals print. And here we got a fractal print, boom, at 44.2. So if you are long during this period, you can use this as your trailing stop loss. And eventually that did get hit, right? So here, you're either stopped out here or your ask is at the cloud. The two questions I get most commonly are, okay, why don't you just stay in the trade if you know it's going to be a trend reversal? That's completely up to you. Go for it. Sometimes it keeps going, sometimes it doesn't. Second question I get is, if it goes out of the cloud and comes back in a second time, do you take that trade? I do not. I do not give it a second chance as a edge-to-edge move. If it happens a second time, what you're waiting for in that case is a Kumo breakout. You're everything to say go from a vanilla cloud perspective. Bullish cloud, bullish TK cross, price above cloud. You're waiting for all those things to happen before going long a second time in this case, right? Because that never triggered here, and it typically doesn't, right? If it's not actually a trend reversal, you're not going to see these setups stop you out all over the place with these settings 2061, 2030. Not going to go into that in the video, but you can watch some of my other videos as to why I use those settings. So that's BTC, and it looks great as a setup. We'll see if it actually plays out. I'll be trading it. Something that's active. The great thing about crypto is there's so many different iterations and versions of all these charts. This is all in the daily time frame, by the way. This is ETH. ETH, technically, this trade has triggered. The setup has triggered. It triggered on the TK cross beginning of August, a few days ago, right? So you have a candle closed inside the cloud. You had that a few days prior. You did not have the bullish TK cross. Whether or not you traded any of that before is up to you. For instance, I traded this inverted head and shoulders to this, right? I got out here and said, okay, what's the next trade? What am I looking for? I did not stay in this trade with the expectation that this is going to be an edge to edge, even though that's how it worked out. It hit the measured move of this chart pattern as expected. I took it. I said, great, awesome. Next trade. So this is the next trade. This is active, and your fractal on this is currently this wick low. So even though it's not on here, that's the trailing stop loss currently. It's tight. It's super tight, right? Alternatively, your bids, if you're not in this trade yet, would be somewhere down here around 1400, the Kijun at this point in time. This is the toughest type of setup because it's early in the cloud. You didn't have the TK cross. Ideally, you have that TK cross first, and then it goes into the cloud, because then you're laughing, as they say across the pond. But this is a tougher trade, right? The target is there the whole time. The whole time 2200 is staring you in the face. That doesn't change at all. It's just the entry gets a little bit messy and murky because the timing is slightly off. The other thing about this is it did have a bearish divergence, so it makes sense that it's pulling back a little bit here. Certainly didn't expect this crazy like M double top. Whatever is happening here looks insane to me, but the cloud is telling you, trust the cloud, trust the process. 2200 is the target. How it gets there, no clue, but that is the target. So your stop loss is either the trailing stop loss or the bottom of the cloud. If it falls out of the bottom of the cloud, that's it, right? Just like the BTC example in March. Sorry, I'm flipping around. When it fell out of the cloud, when it got below the Kijun, that's your hard stop for sure. Again, this doesn't typically give you a bunch of signals that are all over the place. So something else to watch for BTC. This is just the trade guidelines. If you want to take a screenshot or whatever, go for it. But this is the other chart I'm watching for BTC. This edge-to-edge move aligns with a move to the 200-day moving average, a move through this kind of bite of volume. This is VPVR here. So moving to the previous consolidation zone isn't too crazy, right? On paper, right? It is a big percentage, I'll give you that. It does sound kind of crazy, but I like 29, 30, somewhere in there, to a high degree of certainty. But this can fail. It hasn't triggered yet. You know, all the caveats, something to watch for. Another way to watch this setup would be to look at alligator fractal. The alligator is just 3 MAs. Again, this is Williams alligator. Green, red, blue, we're bullish. Blue, red, green, we're bearish. For BTC, again, this is murky as far as trend is concerned. This isn't necessarily taking you out of the trade a bunch of times, but these MAs could cross again like they did, right? Like they did in February and March. That's why I like these higher time frame plays like the cloud versus just simple MAs like this. Now you can adjust these 3 MAs and double them and do whatever you want to do to smooth out this noise. But this is one other thing you can watch, especially on alts that tend to move quicker. Now in ETH's case, ETH does have a fairly clean setup here, right? You had your bearish trend the entire time. Here's your cross, and the alligator gives you the permission to go long or be bullish. We're above that, and there's your stop loss. Like I said, this actually would have stopped you out on the previous candle, and you would have been in again about 7 candles ago when we broke this high. So this is messy, right? It is very messy on trend metrics like this that are low time frame, even though this is daily, right? We're super volatile. It's not wrong, but it is noisy at times. So that's another way to just look at this from a trend perspective. Now flipping through the alts real quick. This is Matic. Matic, again, you kind of didn't have the greatest timing on this, but probably better than ETH because you had your bullish TK cross all the way down here. And then at like 68 cents or whatever this is, it told you, yeah, okay, now it's time to get in. You can always enter earlier on chart patterns, which is what we ended up doing on this horizontal. Target other edge of the cloud, right? That was there the whole time. That isn't anything new. Once this trade occurs, I typically just let it do its thing, let it bounce around, let it retrace, let it reverse, whatever. Who knows what's going to happen up here. If it goes higher, great. You can always enter again at the Kumo breakout. But again, I typically wait for the cloud to flip there. But Matic looks great, but it looks like it already happened, right? The party's over from a trade setup perspective. That doesn't mean Matic won't outperform these other coins. It just means that specific setup already happened, right? But it's a great example of what you could start to see on some of this other trash like Solana, right? I don't think Solana is something anybody should be holding long term, but it does have decent trade setups. Just like everything else, it's listed widely, right? There is a decent-ish community there. Whatever, right? You can rationalize this looking at the numbers. But again, you have the same setup. You already have the bullish TK cross. You're just waiting for price to drift into cloud. Target would be 81.82. Yeah, I know it's a 2x from here. I get it. I don't make up the price. It just is what it is, right? Here's another example of a failed edge-to-edge trade. So failures do happen. It's not like it's always a slam dunk. It's not like the target is always hit. But the trade setup is sound based on historical backtested basis. Here's DOT. Again, another failure here as an example. But DOT just had its bullish TK cross. This is not a promotion of any of these coins or blockchains. Just saying, look, this is how the charts are. Uniswap already had its edge to edge, already moved through the cloud, and has a bullish TK cross. So look, from a trend perspective, if you're seeing Uni for the first time on the cloud, it's saying, yeah, it's bullish for the first time since October, November. It's finally turned a corner from a trend perspective. Finally looks okay again based on the cloud. It may not outperform DOT, SOL, who knows, it may underperform ETH, I don't know. But on a trend perspective, it looks pretty good. BNB also well on its way through that edge-to-edge move at 309, 310, whatever it is up here. And actually quietly made a BTC all-time high, which is scary to think, even in a bear market, you can find stuff like this where on a relative basis, you're still stacking sats, right? Ultimately, that's why most people trade these shit coins is just to stack BTC. So Binance up here at its all-time high against BTC still looks like it maybe has a ways to go. I think it's super late at this point to get into this trade, but just measuring it out, 0.15 to 0.17 looks decently okay, but kind of crazy. Now to ETH BTC, obviously ETH's got the merge. All the meth heads think it's going to flip BTC, whatever, great, I don't care, awesome. I'm happy for them. What I'm most excited about from a trade perspective is ETH has never looked this flat up here at this level. It's never looked not terrible up here, right? It's always had some sort of inverted cup and handle, inverted Adam and Eve, M double top, whatever you want to think of it as. It's never looked this good. It's always been super spiky and gross. It's finally super calm at this level. So from a trend perspective, not knowing this ticker, you'd say, well, I'm waiting for a bullish TK recross above the cloud, and then that's your entry, right? And based on merge, based on hype, volume, options, whatever nonsense is going on, I certainly expect ETH to outperform BTC for some period of time, right? If you're lucky and you're looking at this in a realistic way, you're thinking to yourself, yeah, that's great. Let's let ETH run and then rotate into BTC, and BTC can have a move, right? Or rotate between all these shit coins. That is a gift, okay? So if you're a BTC maxi like I am at heart, you're looking at all this other stuff thinking, man, there's so much opportunity here to actually to compound and make more BTC out of all this nonsense that's going on. So just think about it from that perspective. You know, you don't have to put your full stack in to do okay here, but ETH BTC did turn a corner. Importantly, it never got below the weekly cloud, and it looks like it's setting up for a weekly TK cross above the cloud, as bullish as it gets from a cloud perspective. One other thing to mention about edge-to-edge trades, ETH BTC had one of those edge-to-edge trades in 2020, mid-2020, and sometimes you see like multiple ridges on these multiple targets, right? Eventually, the assumption is these are the levels. Should this materialize into a bull trend, should this materialize beyond a trend reversal, those are the resistance levels going forward, right? This one worked out, it's back tested, whatever, I get it. But if you ever see this in the future, you know, these are the easy levels to look at as far as likely resistance going forward. Even today, as we sit here for above 0.80, pretty good chance this keeps going. You know, I'm not betting the farm on a mega ETH bull run against BTC, but trend-wise, it does look very, very good and compelling against BTC. And then lastly, if we want to measure this out, we could, you know, if you look at some of my videos from like 2016 or whatever it is, this is what I did with BTC. You'd say, okay, take the high, take the low. What do the fibs look like? You're talking potentially 0.25, you know. You got the meth heads all excited about a flippening. I just want 0.25. I don't know what the market cap would be at that point. I don't really care, but 0.25 from here is significant, right? As far as compounding your BTC. So I'll leave you with that. Like, dislike, comment, share, subscribe. Let me know what you think in the comments below. Let me know how bullish or bearish you are on the merge. Are you concerned about anything? Am I crazy? Happy trading.